All right. So I got a good panel today. I'd like to introduce Grace Chao. She is the head of digital assets at Citi, and Dan Chen, who is CFO of Gemini. So the topic of today is going to be a little bit, it's supposed to be the great migration of traditional finance on-chain, but we're going to take it a little bit in a direction of what exactly are these two working on and what are they interested in. To introduce myself, my name is Michael Marcantonio. I'm the head of DeFi at Galaxy Digital. My background is I actually spent most of my career as a lawyer. So I was a lawyer both in private practice and at Galaxy. I started a company a few years back. It was a DeFi company before I was at Galaxy. And I brought that to Galaxy, and I've been head of DeFi there. And so I look at things from a regulatory perspective as a lawyer, but also, obviously, I run a technology group, and so we're focused very much on the technology as well. And so let me just take a second for both of the panelists to introduce themselves. Would you like to say a few things?
Sure. Hi, everyone. Very glad to be here today. As Mike mentioned, I work at Citi. Citi is a GSIB, a global systemically important bank. We have over 220,000 employees around the world. We serve clients in almost 180 countries and have a physical presence in about 90 countries. I'm a member of the markets digital assets team at Citi. Citi has digital asset professionals kind of dispersed throughout our business lines. So I work on use cases for our sales and trading businesses. We also have dedicated digital asset professionals for our treasury and trade solutions business, our security services business, as well as wealth management. Personally, I joined this crypto space about 2.5 years ago, joining Citi's digital assets team. Previously, I had spent a decade and a half in TradFi, starting my career at Lehman Brothers and Morgan Stanley, and then later on a boutique consulting firm doing derivatives and structured products. And then directly before kind of falling into the rabbit hole and studying and learning about the kind of the potential really of crypto, I had done my own Web2 startup. But in 2021, when I read this kind of amazing textbook about Bitcoin and blockchain and cryptocurrencies, I decided, wow, this is a space that could really transform our global financial system. And I wanted to kind of join the space to help kind of move it forward. So that's my background.
Awesome. Thanks, Grace. Hi, folks. I'm Dan. I help lead the finance team at Gemini. As hopefully all of you know, Gemini was founded over 10 years ago by Cameron and Tyler Winklevoss. It is one of the most stable, most established cryptocurrency exchanges here. Really proud to be part of that. We serve customers in over 60 countries. And it's been an interesting journey coming to this point. I got my first taste of crypto back in 2017 when I was a treasurer of Cross River. And Cross River was one of the few banking-as-a-service banks that worked with crypto companies. And I got to see that phase of growth when crypto hit 10,000 and people said it'll never get there again when it sold off. And the real believers, I think, have been able to prove that it's been something real. It's been something that's really established and has a lot of room to grow from here. Similar to Grace, my background is primarily in traditional finance. I spent a number of years at Morgan Stanley, Goldman Sachs, and MetLife. And then most recently, before I joined Gemini, I led capital markets and bank partnerships at a firm, which is the fintech founded by Max Levchin. But really excited to be here today. Excited for the conversation with Mike and Grace.
Great. Let me just get a sense from the audience, like how many of you guys come from the crypto native side versus like the institutional side? Can I just get a sense like crypto native, like a show of hands? Okay, and then institutional, like because I think institutional, their involvement in crypto and in digital assets, blockchains, is shrouded in a lot of secrecy by definition, right? Big institutions tend to be more regulated, and therefore they have to be a little bit less open about what their plans are in the future. But it's super interesting because while the current crypto market, current digital assets market is, a couple trillion, you just compare it to any other financial market, whether that is, public equities, hundreds of trillions of dollars, bond market dwarfs the public equities market. So, derivatives market is is bigger than both of them. And so if how I've always thought about digital assets is I've looked at it largely from the crypto native side. I've tried to get on the forefront of innovations and technology. But with the assumption that the big institutions will one day get into this space, and this will not be a $2-3 trillion market. It will be a $200-400 trillion market. And so it was a little interesting over the last 6 months, to say the least, that we started to see movement from big institutions. But that wasn't always the case. During the previous 4 years, we saw a lot of there was a lot of regulatory issues. There was a lot of issues with big institutions joining the crypto market. So I guess Grace and Dan, like, what have you noticed over the last 6 months, and compared to the previous 4 years, in terms of how the regulatory posture has shifted, if it has shifted at all, and to what extent has that how has that changed your guys' businesses within your respective firms?
Sure, I'm happy to start off. So certainly there's been just the sea change in the regulatory environment over the last 6 months since the new administration came onto the scene. Previously, there were just a lot of guidance from the regulators that made it really challenging for banks specifically to innovate. I can give 3 examples. One, there was SAB 121. So this is accounting guidance from the SEC, which basically said that if banks were to custody digital assets for clients, then they would need to put those digital assets on its balance sheet, which effectively makes it just prohibitively expensive for banks to offer this service.
Can I just why is that exactly? Is that because you have to have a certain amount of capital
Yes.
free? Yeah.
Exactly, yeah. So the capital requirements will make it, essentially it doesn't make sense for banks to offer the service. Secondly, there was a joint agency statement that was put out in January of 23, where our prudential regulators, so the Fed, OCC, and FDIC, suggested that if banks were to kind of issue or hold assets on public chains, that was highly likely to be inconsistent with safe and sound banking practices. So again, very unhelpful in terms of that the work that we were doing in the space. And then thirdly, there were also just interpretive letters, supervisor letters that indicated that were we to launch crypto products, we would need to notify and then get non-objection from our regulators. So all of this now has been rescinded. So it's a completely different environment now.
That's great to hear. Dan, the Winklevi have been particularly outspoken on these issues over the last, couple of years. The regulatory, regulation by enforcement, they've been particularly outspoken. What was it like being at Gemini during that time?
Yeah, well, I can't claim credit for having seen all that. I can't say that as we think about what they demonstrated in their commitment to the ecosystem and the exchange, it was substantial. And I think as we think about what was done to make customers whole, what was done to continue to build that platform during a difficult period of time, like that has stood that test, and I think that's meant a lot to our customers, and hopefully will mean that it's meaningful to others that we want to go to. But I think Grace's answer was fantastic. I mean, you can think almost of the space as a bifurcation between incumbents and insurgents. And when there isn't regulatory clarity, no incumbent is going to move into something that doesn't have that clarity. Like, there's no way that a CEO, a board of directors, or a management team will go into a surface area, into a business, regardless of the opportunity, if it means that you fall afoul of your regulators and you jeopardize everything you've spent decades, centuries building. On the insurgent side, if there's a true lack of regulatory clarity, you're going to spend your capital raise on lawyers' fees, no offense to lawyers. And you're going to spend all your time having memos written on why you can do what you think you can do, and then maybe finding out that some of it is or is not acceptable. And I'd like to actually think that for regulators, that's not attractive either. Like, regulators want to protect society. They want to use an approach and a framework that works. And when they don't have that clarity themselves, that's a very difficult proposition.
Right. Yeah, I can speak from Galaxy's perspective. We actually were sort of forced offshore. So, we're headquartered in New York. We wanted to go public. We actually tried to go public for like the last 4 years. And at the beginning, we said, all right, we're not going to be able to go public right now in the US. Let's just go public on the TSX under Canadian law. So we were on the TSX for the last couple of years, and over the last 2 months, back in May, we finally got approved to be on the NASDAQ. And so we were uplisted to the NASDAQ. And then we moved back to the United States, technically or officially. But the regulatory posture of the time was very, I think, detrimental to building businesses in the United States. And it feels like now that we are a public company on the NASDAQ, we have access to more liquidity, we have access to more capital, and we have just a much better regulatory environment. So it's really quite exciting. It seems like, from my perspective, there's been, what you guys are saying, especially Grace, like there's been a big change over the last 6 months. What more needs to happen? Like, what do you think? Is it the Clarity Act? We just got the Genius Act passed. What are sort of are there any other big bottlenecks right now for adoption for big institutions?
Well, I think on the regulatory front, things, there's been a lot of positive developments, right? The legislation, while they haven't passed yet, and we're still, that it needs to pass in order for any change to be durable. Yep. But there's been just very encouraging kind of steps that have been taken. Beyond that, there's agencies trying to come out and give clarity on lots of different subjects. They're trying to engage in more conversations with industry, so all that's been really great. I think in terms of what needs to move us forward, it's just, it's in a way, I think innovation isn't easy, so it's just a matter of keeping at it. Right. And it's the everyday work. You got people to educate internally and externally, and you need to figure out the nitty gritty of the details of getting a project launched.
Right. Yeah. So I think, assuming the regulatory climate is a little bit better right now, that's opened up a lot of opportunity for your businesses to really move forward and to pursue new areas. Can you tell me a little bit about what you guys are working on right now that is exciting to you?
Yeah, I can kick it off. Like, one thing that we've had out for a number of years that we're quite proud of is our Gemini credit card, right? It's fairly innocuous. It could just sit in your wallet, and it's usable like any other premier MasterCard would be. But it's a free credit card that we offer customers. It comes with an account on our exchange. And we think it provides people who are both crypto native, who foundationally want to earn crypto instead of earning miles, and those who aren't yet deep into crypto but maybe would like to understand it better. It provides an on-ramp for both. And I think that's an important element of how you think about the future of digital assets. It's really about meeting consumers where they are and really minimizing the barriers for them to understanding the product and seeing the vision of what's out there. I mean, back to what Grace mentioned earlier, it's great that we have these elements of regulatory clarity coming. There's more to do. But now I think it's the hard part. Now's the moment where everyone in this room has to come up with the concepts, the ideas, the products, the use cases that make it relevant, right? So now that the gates are open and you can actually go out and build things, I think this is where the kind of rubber hits the road and we have to prove it out.
Grace, I know that you had mentioned, to me at least, tokenized deposits is a thing that you guys are really focused on and working on. Anything you could tell us about that? That's really interesting to me. I actually don't know that much about tokenized deposits, and maybe members of the audience don't know either.
Sure, yeah. So tokenized deposits is actually a product that we have commercialized already. So we, it's called Citi Token Services for Cash. And then we have a related product as well, Citi Token Services for Trade. And what tokenized deposit is essentially a digital representation of funds in the bank account on a blockchain. And so it is, kind of like a stable coin. It is a form of tokenized fiat, tokenized cash. But what's different about it is that stable coins are kind of fully reserved with highly liquid assets, whereas tokenized deposits are backed by the balance sheet of the bank. But they both are, a payment could be used as a payment instrument. And for us, the reason we launched this is because our clients, would like more convenient ways to effect cross-border payments. And so, namely, that is to say, they want to be able to send payments 24/7 on weekends and holidays, which is, is something that is enabled, through our tokenized deposit product. And then the token services for trade aspect of it is this idea that we would leverage a programmability of tokenized deposits, and then we can have conditional and automated payments. So some payment could be put into an escrow account. There could be some trigger event that then automatically releases the payment to the recipient. So that product we have piloted with actually a shipping company related to kind of canal services, can automatic release once the services have been deployed. So. Yeah, that is.
Do you send the tokenized deposit representation? Do you send that between Citi branches globally? Is that, or is it also between other banks?
No, it is within Citi. And so right now the corridors which we have open are Singapore, New York, London, and Hong Kong. And the plan is to continue to build upon that, open more corridors and more currencies as well. Currently it's for USD payments.
Interesting. And have you noticed an efficiency gain with this product versus what you would normally do when you're sending payments or sending cross-border payments?
Yeah, it really comes down to that ability to send payments anytime and to have that happen, in near real time. So
that's very interesting. I mean, we've all experienced, sending USDC or USDT, and it's like lightning fast. And if you try to do that across border, it would be very expensive and it would probably not work as well, right? To say the least. Most providers probably don't allow that as easily as you can send a Venmo. So the fact that USDC, tokenized, tokenized dollars, stable coins, the fact that that has a killer use case already, I think is actually really, really exciting. Talk to me about some other tokenized products you're working on though, Grace, like maybe like tokenized bonds, money market funds, like what else are you guys working on?
Sure, yeah, so we have kind of worked on all those assets. So tokenized bonds, I can give two examples. We did a project with a fractional bond exchange called Bond Blocks. So what happened was they would tokenize full-size bonds onto a blockchain and then fractionalize them. And so then you can offer these bonds out in smaller denominations. So we were digital custodian for this project. We have also worked with the Euroclear on their digital FMI platform to issue and also help with primary and secondary trading of digitally native notes. So meaning these bonds come to life in a digital format, whereas previously under the traditional approach they would come to life in a physical paper form. And so these are two things we've done on the bond side. On the fund side, we have done POCs, so kind of experiments involving private funds that get tokenized, and we've experimented with smart contract capability and being able to use that as a loan against something. We've looked at tokenizing money market funds in connection with an FX swap to enable kind of deployment of transfer currency risk while being deployed into a money market fund. And we also just most recently announced, and this would be real value transaction with the Swiss Digital Exchange. So this is tokenizing pre-IPO equity onto their blockchain.
Wow. What blockchain is that?
The Swiss Digital Exchange's private chain.
Very cool. I guess that leads me to a big question in my mind, which is, it sounds like a lot of these things are extremely exciting. I mean, I've always thought like, man, Galaxy should do tokenized bonds, but like in order to do that, you need to know a lot about bonds. You have to structure these things, and a lot of the expertise on bonds like sits in banks like Citi. So it's like a perfect sort of opportunity for Citi to really lead on that, and I think there's a ton of opportunity there. But so it sounds like most of this is happening right now intra-Citi, like on a private blockchain that Citi controls and owns. Is that right?
Our tokenized deposits are on our private chain.
Right.
That's right.
And for the audience, what is sort of the opportunity for third parties to provide services to a private blockchain like Citi? Like, the beauty of public blockchains, right, is anyone can build on them. So you hear about an opportunity on a public blockchain, anyone in this room can build something and potentially add value. How can we get private blockchains to that place? Or is it almost by definition not supposed to be like that, right? We really want Citi just to control it, and every other bank that launches their own private blockchain to control the blockchain, their respective blockchains.
Well, I mean, that's an interesting question. I think at Gemini, we try to be agnostic about any specific token, any specific blockchain. Like, our goal is to work with as many different platforms as possible. So if there's a roadmap to work with private blockchains, and we are a constructive participant in that community as an on-ramp, as an off-ramp, as a partner in some shape, that's great. Like, we are open and thoughtful about that. Like, we want to be an on-ramp for customers, whether they're deep crypto native or new to the space, to participate in the space. And we want to meet our customers where they are and bring them projects and blockchains that they can grow with. For us, it's not necessarily about whether, picking a winner in one space or the other. Like, that's not our primary goal.
Grace, what about like the public versus private blockchain debate, right? Like, it was a hot topic 2 years ago. During the Biden years, private blockchains seemed to make a lot more sense. They seemed to be something that big institutions that were heavily regulated could actually engage in, largely because a private blockchain can control things like KYC and AML and a host of other things. Over the last 6 months or so, you've heard BlackRock, you've heard a bunch of other big institutions, JP Morgan, say, actually, we're really more focused on public blockchains. What are your thoughts on the debate, and do you have any views on this?
I mean, I see a world where both types of chains exist. I mean, there are a lot of people working on kind of both types, a lot of use cases, a lot of kind of activity happening on both types of chains. And there's also a lot of people working to interoperate, like make these chains interoperable. And so, I see it as, we have the public internet, but we will have private intranets as well. I think it's the case for blockchains too.
Maybe bring that question back to you, Mike. What are your thoughts on the distinctions between those two spaces and where you see Galaxy or where you see the future going?
So I think private blockchains have a role to play as a bridge to ultimately a more robust public global financial system that runs on public blockchain markets. The reason, though, is because I don't know if any one player, whether they're Citibank or Goldman Sachs or Bank of New York Mellon or Facebook or Meta or Google, any big institution can match the speed and scale and efficiency of a decentralized network of builders building on a public blockchain. I just don't think that any one group can match them and compete with that. The scale of innovation that happens on things like Solana or Sui or Monad or Ethereum, right? Like it happens so fast because it's not one party building. So we have always been more bullish and focused on the public blockchain markets. But I do think there's definitely a role for private permission blockchains. And we would like to play in both. And we think that it's going to look a lot like what Grace had said with interoperability between the two. But, private blockchains suffer from liquidity fragmentation. You have a private blockchain, you have to port liquidity over to it from presumably public blockchains. That liquidity fragmentation is something that digital assets and crypto was meant to kind of solve. And when you fragment it across different blockchains, it could arise certain issues and less liquidity. So, but I'm very interested in both. I think for big institutions, I think one thing that would be really helpful is a little bit more openness, not openness, but a little bit more clarity on the role that builders can play in private blockchains, if there are any. Like, if Citi is just, or any big financial institution is going to run their own private blockchain, how can third-party builders interact with that, work on it, contribute? So that's sort of our perspective on it. But we're coming down on time here. There's so much we could talk about. There's so many different topics. I guess one of the things that is what is going to happen over the next 6 months, year? What are the big philosophical shifts, if any, that are going to take place? Where is the market headed? What should we be excited about? I'll just start with me. I do think that we're going to start seeing more tokenized securities, and we're really excited about this. And then the question is going to be, can public blockchains actually move public securities, public tokenized securities, in a way, and trade them in a way that makes them comparable to the traditional securities rails? Like, said another way, could Solana be as effective at trading Tesla as the NASDAQ? If it can, I think there's a huge opportunity, because you have a global financial system and you've got a ton of capital all around the world that doesn't have readily available access to the NASDAQ. If it can't do that, then it's always going to be lagging behind, and it's probably not going to attract much liquidity. So that's what I'm really interested about. I guess just let's go, Grace and then Dan. Like, what are you guys excited about in this space over the next couple of months and into the future?
I'm just excited to see this space just develop. I mean, I think within tokenization, the first tokenization occurred in 2017. So this has been going on for 8 years. And I think it's just, for me, I don't think it's a matter of if, it's just when, right? So I'm excited to see things accelerate, and for, hopefully that we will have true digital bearer instruments on chain, and that there will be real liquidity that has formed around them. And to your point that, the fragmentation issue is solved, and that you can create real robust marketplaces for these assets.
Yeah, maybe I'll combine a little bit of like a comment each of you made that I think is quite interesting. Tokenization of securities, of bonds, of deposits, all kinds of financial assets, super interesting, right? On the public versus private blockchain idea, if a public blockchain does bring transparency, it in theory also comes with liquidity and depth of market. So there's some interesting kind of overlaps in what each of those create. I think that's very exciting. There are obviously a lot of things happening with prediction markets as well, but these weren't things that I think we broadly saw 2 or 3 years ago as an expectation for where 2025 would be. So what I'm really excited about is, what will 2028 look like? Like, if we keep thinking of things in 3 to 4 year cycles, and we are in a mode where people are starting to build new things again, then I think we just want to continue to be a platform that people can bolt exciting ideas on and really partner with them to scale.
That's such a good point. Yeah, I mean, you could look at a year, 6 months ahead, but really 4 years from now. I mean, 4 years ago, I don't think anyone really envisioned the scale of innovation that is happening. I don't think anyone would have thought that Circle would IPO and it would just be an absolute rocket ship, right? I don't think anyone could ever imagine, or maybe some did, but that, or maybe we're behind schedule, I'm not actually sure, but like thinking about that, the Congress would be passing something like the Genius Act, right? There's so many different innovations happening. And I do see that, like Injective, for example, like this is sort of a laboratory of what is possible, right? So like, let me give one example. Right now, there's exchanges, I believe Injective is one of them, but like Hyperliquid, that prioritizes market makers' cancels over taker orders. And actually, in TradFi, they tried to do this in a bunch of exchanges, and the regulators blocked it because the regulators were called up by the by the takers, by proprietary funds and proprietary prop trading firms that were making money off of the fact that they were faster at taking liquidity than makers were in canceling liquidity, and they blocked that. Now, what's cool about crypto is that we can push that forward. We could actually design markets that are different and more agile and experiment with new things. And those new things could be a sea change of improvement, or they could not. But if they are, that gives the traditional financial markets a big blueprint on how to evolve the traditional markets. And over time, with evolutions to blockchain markets and digital assets, you might see actually parity between TradFi and DeFi. So I think we're out of time. I appreciate you both. This was great, and please, I'll be hanging around for a while. So please, feel free to stop me and chat. Thank you so much.